gentlemen, good day and welcome to Control Print Limited Investor Call for Result Discussion of 1Q FY2024 Conference Call, hosted by Asia Market Security Limited. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on the date of this call. The statements are not guarantees of future performance and involve risks and uncertainties that are difficult to predict. Actual results may differ from such situation, projection, etc., wherever expressed or implied. Participants are requested to express cautions while referring to such statements and remarks. As a reminder, all participant line will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Karan Bhatiya from Asia Market Security Limited. Thank you, and over to you, sir.
Hi all, very good afternoon, and welcome all to the Control Print Limited 1Q FY2024 earnings conference call, hosted by Asian Market Securities Private Limited. From the management side, we have with us Mr. Shiva Kabra, Joint Managing Director, and Mr. Jaideep Barve, CFO. Now I would like to hand over this call to Jaideep sir for his opening remarks. Post that, we'll open the floor for Q&A. Over to you, Jaideep. Thank you.
Yeah, hi. Good evening, everybody. I'm Jaideep Barve, the CFO of Control Print Limited. Welcome, everybody, to the earnings conference call for the first quarter of the financial year 23-24. We appreciate that you have taken out time from your busy schedule to attend to this call. Mr. Shiva Kabra, the Joint Managing Director of Control Print Limited, also joins me on this call. The detailed presentation has already been put up on the website as well as in the investor presentation notification on the exchanges for this call. So I would imagine that all the people who are on the call would have gone through the presentation. So we are open for the Q&A at the moment. Hello? Yeah, Karan?
Hi, Karan sir. Your line has been unmuted.
Let's start the Q&A session.
Yeah.
Operator, please announce.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Naser Parekh from Native Capital. Please go ahead.
Yeah. Hi, Shiv and Jaideep. Thanks for taking the question. The first one was on, the new initiatives that we have. So can you just talk about Mark Print, Track and Trace, as well as the packaging JV, all three? What is the update and status on that? That would be helpful.
Hello. Yeah, Naser. Let me answer this question. So the first thing is on the update for Mark Print. Mark Print BV was a company which we have acquired in the mid of 2022. And as such, what we are going to do is that we have imported the machines over here. We are studying the technology. And in the due course of time, we will be able to launch their machines, their technology in the domestic Indian market. So that's the current status of Mark Print. We have also begun work on the Track and Trace So track and trace is a feature or functionality which has actually been mandated by the board for the pharmaceutical division, and about 300 bulk drug companies have been mandated to use the track and trace mechanism for the packing. Currently, we are in the verge of doing the development for a large pharmaceutical company in India, and hopefully we'll be able to build upon that, capitalize on the current opportunity, and spread our wings in the domestic market. Regarding the packaging company, we have already entered into a JV with V-Shapes SRL way back in December. In pursuance to the JV, we have incorporated a private limited company in March 2023. Currently, as of now, nothing much is happening. We are just waiting for the clearances from the overseas investor, and once we are, having all the clearances from them, so we'll begin the operations over here. So we intend to manufacture and sell those single dose, single pack deliverables what would come out of the machine. So as of now, there is nothing much to share about the packaging division.
Got it. And Mark Print, what would be the revenue for the quarter?
Can you just repeat the question? You had rolled out.
Sorry, I was asking what would be the revenue for the quarter for Mark Print?
You want it in rupees or you want it in euros? I mean, in rupees, it's about 2.35 crores.
Got it. And my second question was that you've spoken about dairy and that the traction that you were getting on the dairy side. So can you just talk a bit about that? Like, what kind of clients do you have there? Or any of the larger players are your clients, and what is the traction that you're seeing, and also any other sectors or segments that you're seeing traction in?
Yeah. So we would not.
I can answer that question.
Yeah.
So definitely we've gained a good amount of or at least increased our size of the pie in dairy. So that business has grown, and that has that sectoral focus has helped us in that specific space. As you know, obviously we can't share specific clients, but largely we obviously work with some of the biggest dairies in India. Two of the largest ones, the cooperative, it's more of a cooperative sector, largely in India, and we do have some of the big ones also. But of course, it's something that overall, we are increasing our share, and we have certain cooperatives, and we're definitely trying to also work on some more targeted applications where we can get an edge. And we actually do have a technology edge in some applications over our competitors. So I think that segment is also going to keep growing because there's more increasing, or there's more of an increase of packaged milk, of I think packaged milk products like dahi and all types of derivatives like ice creams and whatnot from milk. So that's worked out quite well for us, and we've got a fair amount of references. So I wouldn't say we were the leader of that sector as yet, but we definitely come to maybe a pretty good stage.
Got it. And Shiva, which other sectors are we seeing some traction, in terms of performance, either printer sales or consumable sales?
Yeah, overall, I think it's been frankly a good market in the last year and a bit. Obviously we've always had our strength in the industrial segment. So the overall ratio between industrial and packaging has not changed, because maybe that some of those sectors are more cyclical, because essentially a lot of the industrial sectors are based around building materials, and right now I think housing's doing okay. So I'm not a big macro India economy type expert, but I think the overall housing sector seems to be doing okay. And obviously when someone buys a house, they're going to need cables, they're going to need lights, they're going to need pipes, they're going to need paints, they're going to need, for wood, like plywood or MDF or God knows whatever to make furniture, or even if they buy furniture. So, we print on a lot of those secondary, like cement, for example. So we print on a lot of those types of materials. So that's been a good driver for us. But at the same time, I think our focused effort in 2 or 3 sectors, like in pharmaceuticals, like I said, we having a focused approach, we got some traction. Again, we are focusing more on the track and trace. And like I said, Jaideep, you also asked that question earlier. So I think like whether it's mark print, it's something that we are getting parts of the technology, trying to use that to upgrade some of our printers. Some of their printers will sell as is, in specific segments. So that's still a work in progress for us to really realize any benefits of that, frankly speaking, so far. It's also been a bit slow from our side, so I'm not, saying anything to anyone. We've had a lot of other projects going on, and we have a limited amount of resources on the development side. The second thing is, also as far as the tracking goes, obviously that's the driver. And we have some orders in hand, but we still have to execute them, so there's no billing on that side as yet. Like on a large way, of course, we've supplied some systems in the past, but now at the next level in the pharmaceutical, that's still working. So it's still you can say like a negligible revenue contributor yet, but it's something we're expecting to build up over a period of time. And, that's a second potential thing that can happen. And of course, the third area, which is the packaging, is something that, we are working with V-shapes. It's actually a slightly longer and more difficult process, because especially the materials that we supply are a bit of an issue, because to import them from Italy was frankly too expensive for the domestic market. So, we've been working on a couple of guys out here to help develop a local source for the materials, which will be significantly cheaper than importing it from Italy also. And that should hopefully not only get the cost down, but decrease the turnaround time, because obviously it will be printed with some material, and then to get something from there, it's a cumbersome process, because it's months. And then in the meantime, when any information changes on the pack, then it's not possible to coordinate. So because of all those things, 3 things, those are like still what I'll say future sectors, and then again in the future, it won't be like nuclear fusion. That will always be the power source of the future. But like, yeah, we are still, I think for it to be honestly contributing to the top line and the bottom line meaningfully, we are like about 12 months away from that. That is what I'll say. Like, that's the very minimum. For it to be meaningful, we'll see something coming in, but for it to be meaningful, let's take it as 12 months at least. Now, and getting back, like I said, our sectors, we've got a good growth overall. In personal care, we're very strong. We've actually increased our market share there further. But in food, still we are the smallest of the 4, but the big 4, and of course that's the biggest market in India. So that's been a problematic phase for us. But we've picked up a bit of share in a bakery. On the outers, we've picked up a little bit of share in dairy. Of course, in dairy, we actually picked up a good amount of share. And in pharmaceutical, we are getting some traction, but we still have to convert it into real sales. So that's the overall picture. But, so like in the packaging side, we're increasing the types of projects we're doing. We're definitely doing very well in personal care, which we were already doing well in before. We further increased that part of the business. And in food, we're getting some benefit, and especially definitely, like I said, led by dairy and bakery. But yeah, I would say like we still, by far the weakness in that specific industry, and that's the biggest industry. So that's where we really need to look at in the future, But we've got our pockets of strength and weaknesses.
Got it. No, that's very helpful. Thanks a lot. Just one last question. This quarter, how many printers did we sell? What last year it was 3,200 or something, which we sold in the full year. So it seems like on a quarterly run rate basis, we are like kind of lower than what we did last year.
Yeah, we sold about 650 printers this quarter.
And versus last year Q1, that would be?
It was a higher number. I mean, close to about 775. So
what would be the reason for the decline?
So, I'll just. So first, there are two issues. We're having some technical problems right now with some of our printer, with one of our printer, across the highway. So that's slightly lower in production because, we switched models from the previous model to the current model. Now, we don't have certain electronics for the previous model. It's taking some time for the delivery. And we have some orders which are not able to execute as a result. And we have sufficient stock of the newer printer. But obviously, a lot of customers, they go slower because some inks are only qualified on the previous printer. We have to test each and everything. It takes months, for it to be checked for stability. We are having some more technical issues in the newer printer which we're still trying to resolve, and we're working on it very actively. And so there's some stuff like that. But also the other big factor that's happened is, we have a limited amount of resources and manpower. So what we did do was we've asked that, for all our, so what happens is a lot of sales guys, they tend to make sales to a lot of, B, C, and D accounts, and that takes a lot of time and energy. But what we've been doing is because we have a limited amount of resources available, we want to focus on the C and D accounts especially, only with our inside sales team, the guys who's in office and then they call and they generate the inquiries. And we don't want to assign more than one sales call to close a printer sale to our sales, the actual field sales person. So that's the basic idea. And obviously, so it's obviously like there is a little bit of pain out there because we're getting better quality of sales and because we're getting more in the A plus category of customers, which is our main target market. But definitely, we are slightly struggling in the C and D because it's still not so easy to sell over the phone, VC, and set up 90% of, 80% of the work before the guy goes to finalize the thing. So that's where the issue is. So we have, obviously, this is something that's also like an issue with our own sales team because they feel like they're targeted. But, this is what we have to do is what we felt.
Because the, decline is like, volume terms greater than 15%. So I just want to understand that because of technical issues we'll be losing market share or because the market is definitely growing and we are declining. So, is that problem still continuing in your view or in the last 1.5 months in July, August, you think we are over that and we are seeing growth year on year?
I think that we're not losing any market share meaningfully, if that's what your concern is, or our momentum. As of right now, I can only say for the first, 3 months and the little part of July that went by. So I don't think meaningfully we've lost any market share or we're losing any customers. In fact, we're gaining, I think, some good key customers. Like I said, there has been a change in sales strategy. It's not possible for us to keep recruiting so many sales and service engineers and service a lot of small customers who have marginal revenues. Although that's very important for the numbers. And, that's been a major change of our strategy since the last 6 to 8 months. So that has led to, like I said, a decline of, relatively speaking, lower value or lower value sales of printers. Second thing is a mix which we have not disclosed exactly between different types of printers. So like I said, the thermal inkjet or something has a relatively lower value per printer of the type of revenue we get. The inkjet printers have a relatively higher value. So there are different types of printers. But, I think that the sales cycle, if someone asks me, is reasonably good overall. It's as of right now, it's not concerning me. I would say at all that I would say we made a mistake by changing our strategy. We got to go back and target all the smaller customers to make up the number. I wouldn't say that. And of course, the technical, these are things in our business that they just keep coming in. it's one of those things we just have to deal with.
Got it. Thank you. Thanks a lot, Shiva. All the best. Thank you.
Yeah, thank you.
Thank you. The next question is from the line of Tanika Agarwal from Green Portfolio. Please go ahead.
So I have a couple of questions. Like, I was going through the presentation earlier this morning, and the company has mentioned about moving forward by way of new product launches and, also through the organic and inorganic routes. So if you can brief a bit on this.
I couldn't actually hear that question clearly. Could it be repeated, please?
Yeah, I was saying that the company has mentioned in the presentation about moving forward by way of new product launches and also following the organic or inorganic route. So if you can talk about it in brief.
Okay, so the organic route is quite simple. I think we've said it in some past calls that, we believe the market is going to grow at about 1.5 times GDP. That's the market rate. So it will be about $5,000 to $6,000 per capita. So, if India is going at say 6-7%, the market is going to grow like 9-11% approximately. Beyond that, what we grow in our core coding and marking business is going to depend on our performance relative to our competitors. And obviously that's so that's down to what sort of products we are focusing on, our sales strategy, our service bills, our technical satisfaction and reliability of our customers, and those will play those variations between us and our competitors. But the core market is going to grow approximately 1.5 times GDP. And of course, it depends on how India's GDP is growing overall. So, and like I said, so just assuming that India is growing at 6-7%, someone can multiply up to between like 9-11% is the core market growth. That's the organic growth, which we said that we can grow at without requiring any capital investments or any other type of fundamental change in our business. Then the second part, obviously, is that we've taken some new initiatives. I think, the previous, they talked about the packaging that we try to, it's an allied business. So we've taken a first call with V-Shapes to get into. One was a mark print. One is that we also started a subsidiary called ICIPL, or rather we purchased a company, invested in a company called ICIPL, which is targeted more at the CSD grade customers, where we are not able to, we don't have that type of level of resource that we can allocate to every single customer. And the thing what we've seen is in India is that the smaller customers are less sensitive to reliability and breakdowns, so they're more cost sensitive rather than focused on purely on reliability and productivity. And we're not a big discount house out here, so it works better for someone like ICIPL, honestly, to target them to some extent, And so those are the situations that are there. And so that's where the growth is. And of course, so this is where the organic growth elements are. And then the inorganic elements are like we purchased Markprint. And obviously we're looking at developing that business. We're looking at, more into ICIPL, we're looking at supporting them in their growth journey. And of course, we started V-Shapes as a partnership. So I don't know whether it comes as organic or inorganic or, I guess it comes as organic. So the idea is we're still looking. It's a bit slow, obviously, because we've already taken 3 or 4 initiatives, and, the track and trace is something that we've developed organically in-house through our development. So we're taking some initiatives to see if we can, grow beyond our core market growth rate. So obviously one is that what is our coding and marking strategy? There is a marking at 9 to 11%. How do we keep up with the market? What do we do to keep our customers satisfied? Can we do something that can give us something beyond that? That's one part of our strategy. That's the organic growth. And we've taken some other initiatives like I just discussed right now, which would hopefully help us go faster than the market rate. But I think what Jaideep, mentioned clearly is in terms of organic, if something comes up in packaging or a digital print coding and marking space, which could fit well with us, obviously, we would be interested in taking a look at it. I think that's the situation. In terms of, so nobody can predict because, nobody knows what's going to come up. But if something comes up, we would definitely be open to it.
Okay. So basically, we could say that we do not have any proposals on hand for acquisition or going for some inorganic growth right now. But we currently can eye them in future, as you mentioned, especially for the packaging and for the digital material, right?
So, I can't say what we're doing right now or not. That's just conjecture, What I'm trying to say is that we are open to it. But, still, that's but I think that we are open, like I said, to inorganic opportunities for sure. But obviously, what we are focused on is what is under our control right now. But we have, I think, some amount of capital available to deploy if that situation arises. And if the right opportunity comes, we'll take it. Otherwise, I think in the previous call you've mentioned redistribute to shareholders at a higher rate. So that's what the situation is. But nobody can assume that what I'm saying right now is nothing. Because obviously, whichever talks try to have anything with anyone is purely confidential. And if anything ever happens, which is significant, we will announce it in the due course.
All right. And so my another question was around if you can tell a little bit about what would be the addressable market size for a product in India as well as for the overseas market.
So I think as you mentioned in the previous calls, us along with the other three major competitors in India are about, I think the four of us will be about 1,400 to 1,500 crores, and the market will be about 20-25% bigger than that. So maybe somewhere between 800 to 2,000 crores will be the market, out of which the four of us are between 1,400 to 1,500. We get the figures for our competitors significantly later because of the ROC filing and other stuff coming later. So that's an idea of the market size in India. Worldwide, it's about $7 billion. When I last checked, it was like about 1 or 2 years ago.
All right, please. And the last question from my side would be if you can give me what would be the average realization for consumables per printer per annum basis?
Yeah, I think Jaideep would have shared those figures, but he didn't address this.
Yeah, hello. Yeah, can you just repeat your question?
So what is the average realization for consumables on a per annum basis per printer?
See, we cannot give you the figures of the average realization, but all what I can say is that once we sell a printer, it lasts for at least about 5 to 8 years, depending on the operating conditions in any company. So the consumer business is for that period of time.
Okay. But a ballpark number, I know the average realization would differ from model to model. For different printers, it would be slightly different.
Yeah, we will not be able to disclose this. It's too it's a confidential matter.
All right, sir. No issue. Yeah, no issue. That's all from my side. Thank you.
Thank you. The next question is from the line of Rupen P. from RN Associate. Please go ahead.
Yeah, thanks for the opportunity. My question is to Mr. Siva Kabra. Basically, as you have alluded many times in your past calls and even today, that if one were to establish a correlation between, GDP growth in real terms vis-a-vis the growth of industry, coding and marking industry is approximately 1.5x. But, considering the regulatory tailwinds, like say, compulsory marking on top 300 pharma drugs and other regulatory tailwinds, plus you are pouring into adjacent categories of tracking and tracing and inorganic growth initiatives, be it in the form of mark print acquisition or, forging a tie-up with VSAP. So, going forward, I mean, not immediately, but say over next couple of years, maybe 3 to 5 years time frame, would it be fair to presume that control print can outperform the industry growth by a wide margin? So, your perspective, Mr. Siva.
No, I think we've given an idea what the industry growth is. We can underperform, we can outperform. I mean, everyone thinks that they're going to outperform. But, I'll just be very honest, like Domino especially, but even Videojet and Markin & Barge are all, great competitors. There are smaller guys who want to try to maybe break into the big league. It's still not that far away from happening. But, so nobody can predict, obviously how things are going to go down the line. Whoever is there is optimistic. One day if we have some issues, we are down 20, and one day when you're doing well, like you have some big sale, you feel very optimistic. So, really, my view is the most stupid view to take. So I don't think that there's any function taking, any functionality in my view. I think really it's for each person to do their own little bit of research. Like I said, all these other ideas that are there and what we're doing, we're transparent about what we're doing. Whether these things are going to be successful, whether they'll bring scale, whether they'll be how profitable they'll be, we don't know. We're just trying to do our best given situation that is there. So that's what the thing is. I can't give any assurance to anyone as to where we're going to be in 5 years down the line, because I don't know where it will be 5 months down the line. So 5 years is like a long time away. But approximately this is what the historical core coding business and GDP growth has been. Second thing you had asked, some moves that definitely when the government or the regulatory standards change, it can be positive or negative. So, for example, right now, I don't know if some of you have noticed, like, you have to print the price per gram or per 100 ml or something on a lot of packs. So that's increased the amount of ink that's being used suddenly. So that type of thing is positive for us. There was the track and trace regulation for pharmaceuticals, and that was actually negative for us because we were not ready with our own track and trace. That drove some business to competitors, and then now we're ready with it. But the overall size of the market has increased as a result. So now we're getting back into it. We are gaining some traction there. So of course, definitely the regulatory reasons will obviously be a driver. So if the regulation increases, that will increase the market at a fast rate. If the regulation decreases, the market could also get affected. So, we just believe that at the 8 codes, match codes, and these other things will always be required, but, nobody knows because it's obviously up to the government to take that call,
Yeah, okay. And second question is, regarding Sri Lankan business. So any update on Sri Lanka's operations?
Which operations?
I think you have some operations in Sri Lanka. So any update on that?
Yeah, Jaideep can give an update on that. I think will be better.
Yeah. About the Sri Lanka operations, as you are aware, that the country was in a turmoil. Slowly and steadily, things are improving in the country. Not much of economic development happening, but the stability is happening. So what we have done is that since we've already have an installed base of few printers over there, and they would require regular servicing as well as consumables. So what we are doing is that we are just trying to revive the operations over there. It would take about 2 to 3 years for the operations to be in full swing. But we are hopeful that with the economic turn, our Sri Lankan branch also will do good business. Right now, it is too early to say. We've just started reviving the operations over there. So we are hopeful of doing a U-turn, which is complemented by the economic upturn in the country.
Okay, and would you be interested in foraying in, say, other countries in Southeast Asia, say, for example, Bangladesh? So, I mean, your perspective on that.
We're already working in Bangladesh through a distributor.
Okay. And how is the business progressing over there, and what is the potential of that market?
So definitely the market has potential. We are not there directly, so it could be a bit faster growth. But we like I said, we only have a limited amount of that we can handle ourselves. So because right now we've got so many new initiatives we've taken, and even some of the existing products where we have to increase the sales, like I mentioned earlier, that we even because of the amount of the amount of effort it takes to hire sales and service people and train them, we felt that we can't service C&D customers at that same level, or rather we are servicing them, but we can't afford to do it at that same level. So so I think like right now our focus is still a lot more on India, is what I'll say, and at least for the next year or two, I think that the idea would be to focus more on India and develop some of the other initiatives, hopefully, so that they're not theoretical initiatives, but they're actually like revenue generating, and to some extent, obviously for the next 2 to 3 years, the coding and marketing business will be the main business, the primary driver of the revenue and profitability, especially on the profitability side. So that's sort of where the situation is. But like other countries, it's a lot of effort, because we said in our business you have to develop a sales and service network, and it takes time to be in the market before you develop, customers gain that trust to go for you. Like the large customers who have a lot of business go for you, because for large customers, productivity and reliability are the key aspects, and that comes with time. It doesn't come just by going there and selling something but cheaper.
Right. Okay, thanks. That's it from my side, and best wishes for future.
Thank you, sir. Thank you.
Thank you. The next question is from the line of Alisha from Envision Capital. Please go ahead.
Hi, sir. Good afternoon. Thank you for the opportunity. So the first question, earlier in the call you mentioned that there were some technical difficulties we were facing with a new printer, and the older version there was some electrical component shortage. What is the update on that? Has it eased? Are we expecting this to continue maybe for the next couple of months?
So obviously nobody knows how long it's going to take to resolve these issues. So there are some technical issues that popped up recently when we upgraded the software, but it's causing some bugs in some other things. So obviously we're working on debugging some things. So it's a pretty technical thing. I can't answer. It could be solved tomorrow. It could take like up to 15 days to a month to happen. But we should be able to manage. In the meantime, we should have enough stocks to and enough leeway to not lose sales. Although because we can't send it out, we can't bill immediately. As far as the older printers go, there's definitely a time lag. I think Jaideep knows, but at least it's a few months before we'll have those components available. Jaideep, if you want to just give a slight update on that.
We do have an order pipeline which we can definitely execute in the Q2. So the shortages of sales will be definitely complemented by the increased sales in this quarter.
Sorry, I didn't get that. The new product is not the technical issue is not. Hello.
Yeah, we are on the line. We can hear you.
Okay, yeah. I'm saying the issues with the new product is not resolved, and for the earlier product we still have component shortage. So how are we expecting a pickup from Q2?
So it's like we do have robust procurement strategies. So the shortages in stock is an issue which is not material anymore. Plus we've got an order pipeline which we can definitely execute and make up for the shortages in sales as well.
Okay. So on the printer side of our business, and I know it's a smaller part of our business, but nonetheless, will we be able to do any volume growth on full year basis?
I didn't get the last line, Alisha.
I just wanted to know on the printers, like there is about a 15% volume degrowth in this quarter, and you have mentioned the reasons. Just wanted to know on full year basis, will we be able to do volume growth on the printer business?
See, as of now, it's too early to say. There are 3 more quarters to go. So it's too early to say as of now. It always depends upon the product mix and conditions during that period of time. So we cannot say anything as of Q2, Q3, Q4 how it will be. But yes, we are quite hopeful of achieving the numbers. So that's not an issue.
Okay. And on the factory trace in pharma, I believe that the barcoding has to be applicable from 1st August. So whatever inroads we have to do with clients will have to be in the next 1 month?
Yeah, it is applicable from 1st August. I think there's a extension requested. Denied. I don't know where the final result is, although a lot of companies are not ready to go live on all the 300 main products. But maybe they will supply right now from some of the stocks that they've already made prior to August 1st. But yeah, definitely it's something that's there, and obviously we are working to execute those things at the earliest. But in these types of system sales, you get some advance in some stuff, but it needs to run for some time before the customer accepts that everything is running, because each line is a bit different. There's a lot more integration work rather than just setting up a printer and getting out of the factory door after giving some training. So yeah, so the pipeline is there, but I think right now, like I said, it's a longer term game. The reason why the implement is for compliance as of right now. But in the longer term, because that infrastructure is there, we believe that people will start using that infrastructure to actually improve their business.
So, and on the pharma side, have we made any inroads? We have the technology, right?
Yes. We
have the technology.
And
okay.
I think it's the best right now. So, yes.
Okay. And on Markprint, you mentioned that we've done some 2 crore odd revenue for the quarter. What is our outlook? How big do we think this market can be in India? When will we see this probably contributing slightly more significantly? Or what is the kind of outlook that we have?
Jaideep, are you okay? So I think that Markprint does about 2 odd million euros of revenue a year or something approximately. And looking at the Indian market, like I said, it was something more for future strategic growth. Sometimes we might or might not see the results depending on what we are purchasing from Markprint, because we might use some of their technology to upgrade our own product rather than buy it completely from there. But some of the markets they are targeting, we don't target in India. So that's something we still have to explore, because some of their sales are on the printing and some specialty type applications. Whereas we're more focused on the packaging side. So we still have to develop some specific solutions in conjunction with them, or are we working on that? So I think the types of products that we believe which will be most suitable for India, yes, I know we said that it will be available sometime at the end of this financial year, at the last year, but frankly, we're still at like 6 months away from things coming. Probably towards the end of this calendar year is what I'd say, in fact. Yeah, so like about 6 months before those things are actually completed and tested at a customer site, and we're ready to actually start generating revenue on those. In the meantime, of course, we're looking at selling some of their products as from the Europe, but the things that we feel which should be more a bigger revenue generator in the long term, which is like some stuff where we've cooperated together to get some products which we believe right for certain market segments in India. That's still at least 6 months away.
Okay, so will be part of the future strategy. Got it. And just one last question: any outlook you'd like to give for this year's revenue growth or margin?
No, we don't know what's going to happen. I think the Q1 was okay, so we'll hope for the everything keeps going okay.
Okay, great. All the best. Thank you.
Thank you. The next question is from the line of Himanshu Bisani, an individual investor. Please go ahead.
Yeah, thanks for the opportunity. So my question is, what could be our max revenue potential at current capacity?
Yeah, I think this, Jaideep, want to take this?
Yeah, I'll take this call. I take this call. See, for Q1, for the standalone, we've already done about 79 crores. And so going by this, as Shiva has explained, we follow the industry trend. So, this is about 1.5 times the GDP growth. So, by and large, you can calculate it for yourself, the kind of revenue, what we will expect. Q1 is very good as of now. We've outperformed. But Q2, Q3, Q4, definitely we'll try to do better. And we'll try to cross the turnover what we did for 2023.
Sorry, sir, if I wasn't clear, I want to...
So Q1 we did about...
Revenue potential at current capacity.
Yeah, Q1 we did about 79 crores. And
if I think talking about factory capacity, I think... So I think, Himanshu, we covered that before in some earlier calls. I think we said that in Guwahati we can do about 300 crores worth of... to 300 crores plus of... maybe we're operating at 60% there right now. And
okay.
We have it anyways adjacent if we need to debottleneck or do anything. And in Himachal Pradesh, we already did some expansion of capacity. We might have to add a few people, if the sales of printers increases at a faster rate than expected. But we obviously trying to optimize the supply chain. So,
So my second question would be, sir, on that mark print that we are, kind of understanding about the technology and trying to bring a similar product into the Indian market. So what kind of product, if you could, throw some light on that, will it be a premium product? And is there enough price sensitivity in the industry?
Sorry, I can't tell you exactly what we're going to do, but we're expecting to target some segments or do some stuff obviously that we're doing right now. We're not able to do with our current software. So, yeah, that's the idea. It's more to, so obviously if we were already doing it with our current set of printers, then we wouldn't need to, upgrade our technology with mark print and stuff. So it's a more niche market what we're talking about. It's more about helping customers who need to, who have more variation in their SKUs. So, it could be someone, like I said, making, batter or something like that, And then he's making an idli batter and a dosa batter and a raw dosa batter and something like that. So he's making, a similar type of packaging for 12 different variants or 15 different variants. And, it could help him, print the ingredients online or some other stuff. So the idea is more to work on those customers who have a high number of SKUs, and obviously the people who have, something like a Frito-Lays will never be interested in a product like that because they've got huge volumes in the existing products, so they can only afford pre-printed. So it's for certain customers who, so that's where our target segment is. But again, so the first risk is a development risk. Are we actually going to develop this product? It's still, that's the first thing that's there. Are we able to develop at a certain, price and efficiency and reliability? So I think obviously those are all big factors and risks themselves. So the second part, is it cost efficient enough for the customer? And the third thing, is there really a market there? So we can only cross this bridge once the product is there, and then we know how expensive it is to run, which we have some ideas. And, so there's no formal market survey because everything seems interesting till you go out and once you develop the product, like I said, sometimes these things work, sometimes these things don't. And then whether there's actually a market for it, we'd only find out when we actually have the product in place and we try to sell it.
Okay, got it. So do we have like a target in our mind that by the third quarter or the end of this year we want to, develop something, we'll look something for marketing?
Yeah, I think so. Maybe someone had asked this in the beginning, but I said according to me, everyone should take I think for this year and even the next year, I think the core coding and marketing business will be the main revenue, definitely the driver. I think we 12 months before we see it starting some significant, or not significant, some semi-reasonable, revenue contributions that actually are somewhat meaningful from other initiatives. And obviously in the mark print, I think I've been quite honest that we're still in the development phase. It's taken longer than we expected, and for whatever I see, it's been another 6 months because we have too many other things going on right now, so we're not able to focus the limited resource we have on that project. The track and trace sucked up a lot of our resources also because of the whole pharma thing.
Okay. Thank you and good luck.
Thank you.
Thank you. The next question is from the line of Devanshu Sampat from Avengers Wealth. Please go ahead.
Yeah, good afternoon, sir. 3 questions from my side. So, as you scale up, should your inventory days come down? Because I would assume that the requirement for storing consumables and parts would be less, and as a result would free up capital as you go along. So, where do you see this inventory number going, say, once you touch a 400 crore kind of a top line? Hello?
I didn't know that question clearly at all. Can you just repeat that, please?
Sorry, I'll repeat this again. So I'm asking, as you scale up, should your inventory days come down as the requirement for storing consumables and parts would be less, and as a result it would free up capital as we go along. So can you give a sense, once we reach a 400 crore top line, what can the inventory number possibly be?
Yeah, so there are 2 parts of that equation. One is that obviously if in our core business, in marketing business, as we increase turnover, you'll see that inventory is not increasing at anything like the same rate. So obviously out there, we don't see that the overall need of inventory. Of course, there might be some increases, but at a significantly slower rate than the rate of revenue growth. But now what happens is, so if you go to 400 crores, which is doing our existing business, maybe, I don't know, if you're doing, the revenue, inventory might go from 100 to 110, 115. So that's not a big concern. It might just increase 10-15%, even if the revenue increases 33% from 300 crores to 400 crores. But if we add more products, like we were talking of mark print, we were talking of the track and trace, so obviously all these things are huge inventory increase type of situations, because although we're not investing in factories and capital, there is a working capital because you need to have the systems ready. When you sell something, track and trace, you have 4 different types of vision systems and things and conveyors and rejection mechanisms. And, obviously, being controlled, we have to keep everything in stock, because if there's a blowout of any one part, anything happens, it has to be replaced immediately, and all those sorts of good and bad things happen. So it's a mix, in the core growth, in the core business, we are reducing inventory as a percentage of sales. As we add other things like V-shapes, and add things like, track and trace, some mark print and certain more other products, and which could hopefully, add to our longer term revenue potential. But at the same time, in the shorter term, they're definitely going to increase the inventory. So I can't predict where things are going to happen, because it's a balance of, how fast each business scales up, and obviously the complexity which we're still understanding, still in that process. Yeah, if you look at it from the core business, it's decreasing.
Sure. The second question I have is, can you give your comment on the business that we're getting from the packaging space, right? So, I mean, I would expect the business to have been quite good in this packaging segment, given that, increased usage because of regulatory angle, which you mentioned earlier, and possible, in an inflationary environment, the small pack consumption goes up. So I suppose there'll be a lot more usage. I mean, the amount of print on each packet would be the same, but I'm guessing smaller packets being used, so you're using more ink. So can you give your comment on that? And, will the packaging segment as a result continue to grow faster and have a higher saliency in your overall mix going ahead?
I mean, it's difficult to say. Obviously, we are focused on increasing our packaging space presence. But of course, our competitors are more entrenched in some of these spaces. So I don't want to lie about it. It's in some cases we've got traction, in some cases we've not got that same type of traction. We have to, in our type of business, we have to like wait for spaces to open up where, either they screw up or there's some, different type of requirement that we could fulfill with a different type of technology. So that's the situation that's there. And, but of course, packaging is growing and industrial is growing. And I would actually say right now industrial is growing faster. But as I discussed earlier, it's a slightly more structurally cyclical business. So, because, it depends. A large part of it is developed, around building materials, construction materials, and of course, right now housing can also go up and down. So I don't, like I said, I'm not a macro expert and all of that, but some of those things go up and down a little bit faster is what I feel, whereas the packaging business is relatively more stable. They're still going to buy milk every day, whether the market is up or down. Whether the market is up, you might say, okay, I want to invest in a new house, or I want to, redo my entire house and buy more furniture or do something like that. So, those are the types of situations you can imagine. So, the second thing, yes, there is some growth in volumes probably in packaging. At the same time, there's a lot of growth that's been driven by like the A-plus customers in premiumization. So that doesn't help us. But I don't know specifically if I'm seeing any smaller size packs increase or not. Like, to be honest, not really. If anything, whenever I go to most customers, I feel that they're focused more and more on increasing their premium products. And that's where they seem to be investing a lot of their packaging money, in terms of development and their marketing resources. So that's what I at least see from my own visits to most of these customers. So, yeah, I mean, like I said, you've got an idea what the overall market growth is. It's like about 1.5 times, and that sort of remain reasonably consistent. Of course, it can dip slightly, it can increase slightly, but, that's what we've seen. And so, yeah, that's a situation that's there. And how we grow, like someone asked me, and I said, in the end, we have ambitions, but even our competitors have ambitions, and, it's all going to come down to everyone's execution, and it's not going to come down to anything else. I think that I don't have that feeling to say that, we're smarter than Domino and Emergent, Videojet, and other guys, and we're going to do much better than them. We'll obviously try, but we'll see. And it depends on, we made 3 years ago, 5 years ago, which will give us this benefit now. It's not just what we do today.
So sure, sir, but just, in relation to this response you just gave, right? So if you look at the entire industry, if I talk about Videojet, Markem, or even Control Print, up till FY18, all of the players are looking at about a 16-17% kind of a CAGR growth. If I look at I'm talking about a 5-year growth.
Okay.
Thank you. The next question.
I could hear that clearly, actually. So, what happened out there? Okay. Let's continue.
Thank you. The next question is from the line of Richa from Equity Master. Please go ahead.
Sir, thank you for the opportunity. My question is related to the consumables business. So in the last few years, hello, am I audible?
No, I mean, we cannot hear you much. Richa, can you be a little bit louder?
Yeah, is it better now?
Yeah.
So my question is related to the consumable side of business. So I've seen the margins varying from, 30% to 29%, 24%. I just wanted to understand what is our ability to pass on the prices, whenever whenever they go up, are consumers receptive to a price increase? And if it also depends upon, the sectors that we are exposed to as compared to competitors.
So just to answer that question, I think our consumers' margins have been quite steady over the years. Definitely, when there's a raw material cost increase or something justifiable, we increase our cost to the customers. It can happen with a slight lag or something, but the consumer's margin not stay different. But what happens is certain types of consumables, like ribbons or our thermal inkjet cartridges, might have a different margin than, say, some of our different inks or something else. So we don't give that exact breakup, but the mix can change the margins overall of those products. But our overall gross margins as a company, I think, have been reasonably consistent. But I can't offhand, I have the numbers right in front of me, but overall, on a standalone basis, when we talk of the coding and marking part, again, I don't know which numbers you all are seeing versus what we see. It's quite consistent. If anything, we're quite comfortable where it is, and obviously, depending on where we need to, we can try to increase that or decrease that. But we're still in a phase where we are trying to make sure that everything runs as smoothly as possible for all our customers. Not really for the margin expansion, but more on sales expansions.
Okay. And sir, this effective tax rate, whatever exemption we are getting from the Guwahati plant, over 3 to 5 years, do you expect the tax rate to remain the same, or are they going to be changing?
Yeah, over the next 2 years, our taxation rate would be around 17%.
Okay. And so if you could also talk about any new clients that you have added during the quarter, and, if not the names, what sectors they are from?
I can't hear you very clearly, unfortunately.
The new key clients that you might have added during the quarter, and if not the names, but maybe the key sectors that you have added new clients from.
No, I think whatever product lines we've had, we put it up. It is all available on our website, actually. So I don't think we keep changing models and we keep upgrading stuff, but we don't fundamentally change the product line now.
No. My question is on clients, the new clients that you have added during the quarter, and what sectors they would be from.
We don't give the names of the clients, Richa.
Okay.
We can't give the names of the clients what we've taken, but we've done considerable growth in pipes, food, dairy, wood, FMCG. But on confidentiality rounds, we would not be able to give you the names of the new acquisitions of clients.
Okay. All right. Thank you so much.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to address the question from all the participants, please limit your question to one per participant. The next question is from the line of Sanket Kapoor from Kapoor Company. Please go ahead.
Yeah. Namaskar, Shiva sir. Namaskar, Jagdeep, and permit me to put forward 2-3 questions. One question is that, if time permits. Sir, firstly, sir, you did mention about we growing at 1.5 times than what the GDP growth would be. So this is factoring into the consumable segment growth. Is that understanding correct? That growth in the consumable segment?
Yeah, definitely. If the overall revenue increases, then the consumer's revenue would also increase, Saketji. But that proportion, I cannot tell you between the printer and the consumers. It depends on the mix of printers and, the exact area where the new lines are being added. But in general, the consumer's business is growing slightly faster than the printer business because obviously the stock of active printers increases, and our printers have a 8 to 10 year life.
And sir, if we take this quarter number, I think the Q1 generally we start with a slightly lower revenue, but I think in the presentation also it was mentioned that this is the highest revenue ever posted. So definitely the factors that are contributing towards the growth are having strong tailwinds. So we can look forward to these as the base number going ahead. At least that this should be the parameters on the basis of which we can work out the current year numbers.
So, Sakiji, we will know what's going to happen. So, I mean, obviously, we are happy with what happened in Q1, but in the end, it depends on the, we're a secondary business. So, we depend on someone like Unilever, making Surf Excel or Marico making Parachute, and then we are just printing on that. So, it depends on how much they are selling and, and so on, so many factors. So, we cannot say anything.
Okay.
So, it is going to depend on the market, overall market growth, If someone is selling pipes, then only we can print on it, even if the printer is there. So, so we don't know, because what I'm trying to say is overall it's going to depend on, the overall market growth. And
so, but we do
secondary, it depends on our performance in that market. So, from both angles, are question marks, right?
Okay, but we do generally get the fillers from the people as the stock of consumables getting exhausted. We know the timeline or the return time, the time by which they get refilled. So that gives us a sense how the utilization levels for them are shaping up.
Definitely, I think so far
the turnaround time
that the printers we have sold last year are giving us revenue, and further it seems that the utilization rates of some printers, at least in some industries like phase around construction and building materials, has increased, it seems. But we'll see how it continues.
Okay. So two small points. Firstly, on the consumables, what is the utilization levels for the consumable segment, or what kind of growth can we what kind of growth can we factor in for the next capacity expansion in the consumable segment?
Sakiji, we are probably operating about 60% of our capacity in Guwahati, so we could grow substantially. We might have to do some debottlenecking here and there. The main issue is not in the production capacity; it's in the storage of the raw materials. Because we have everything of ours comes under chemicals and explosives licenses. So we have some very specific storage. So depending on how many days of material we need to store, we have some limitations. So if we need to do it, we have to do it a bit early. But it's not a huge cost. Like I said, even if we have to have a brownfield expansion of some facility out there, I don't think it should cost more than 10-12 crores.
Correct, sir. And lastly, sir, I congratulate the board on the buyback part, and I think so. 18th August has been kept the record date for and also adopting the tender route. So it would give us equal opportunity to participate. So in conjunction to that, sir, if you could answer, sir, the point. So when we have looked at the number of say 800. How did we arrive at rupees 800, and how did we put forward that we would be putting it at 27 crore? And if you could give us some more understanding, how did we came to this conclusion? Because for the buyback part, it was you did spoke that keeping aside 50 crore as a buffer for expansion and also for inorganic activity. You would be setting as less than that. You would be returning back to your shareholders. And a small point also here is that, sir, buyback happens in companies for two reasons. I think so. Firstly, if the valuation which the market is giving is lower than what the management or the board feels, and secondly, if they don't have sufficient visibility for growth, because they are unable to deploy the additional cash generated from the business to grow more of the business. So which criteria have fulfilled that has resulted in this buyback part? So if you could speak something more on the buyback, that would suffice it.
Okay, Sakiji, I'll try to answer best as I can. So the first point is that the reason for the buyback, actually, we've communicated from some time ago that, we had a certain cash balance available with us. And I think, obviously, right now we have a lot of money lying around, some 4-day FD or something like that. So obviously we were giving out the money as dividend, and the problem with increasing the dividends was that A, it was not tax efficient, and B, the problem with increasing the dividends was that, sometimes people take it that you have to always keep that same dividend going, whereas a buyback for psychological reason is considered as like you can start it and you can stop it for whatever reason. So the purpose of the buyback is frankly, it was just to return cash beyond what was necessary for, obviously we also have a facility with ICICI and HDFC who are our bankers to borrow. But since we've taken 2-3 initiatives right now, and obviously we still look for more, but we also don't want to take something that's, beyond our capability in terms of execution. So between the amount of money we have and the amount of banking facilities we have, we felt that we don't want to invest more than this in an acquisition because it can also be risky. So, beyond that, like I said, it was about returning money to the shareholders. And so the buyback should be viewed frankly as a dividend replacement or a supplementary dividend. That's our view. And I don't know if we have communicated that clearly to the shareholders or not, but that's the experience they should go with. Secondly, we have always communicated what the market growth is approximately, and obviously it depends, like I said, on how good we are in our execution capabilities, and that everyone has to do their own research as where the company is heading. But I think at the same time we said that there's no major capital expansions, on the horizon, and that's not our capability is not there in, running. And obviously we admire a lot of companies like Cosmo, Polyplex, and even guys like SRF, Supreme and stuff in the packaging films and those types of Parkinson's and all in the bulk of packaging. But that's not where we feel that we'll be successful. Our type of thing is more around the technology angle rather than in, high levels of production and high levels of capacity utilization and inventory turns. So we also admire these companies a lot, but we don't have the belief that we can compete with them in those types of spaces. So obviously that large area of packaging is not open to us. So, so we don't have like large, capital needs in our business. And so the cash is available. And like I said, so for us, the view as which the board communicated, maybe not very clearly, and is that this is purely a supplementary dividend of sorts, which could be considered as more tax efficient for some shareholders than just giving it as a straight up dividend. So that's the situation. As far as the pricing and the rest of it goes, so I can tell you, I know Jaideep will give you the thing, but the actual value and the price, because Mr. Kabra and me and the two were interested shareholders, we were not part of that meeting. That was decided by the independent directors, and Jaideep might be able to give you some update.
See, Mr. Saket, as you would be aware, we are taking the tender route, and we are bound by the relevant sections of the Companies Act. So whatever was available, up to 10% of the capital and free reserves, we have tried to use that balance and announce the buyback. And of course, we have made sure that it is well within our budget and available cash flow. So that was the main thing. So we've complied with all the legal requirements as well.
Thank you. The next question is from the line of Harsh, an individual investor. Please go ahead.
Am I audible? Hello?
Yeah, Harsh, can you be a little bit louder?
Yeah, sure.
Yeah.
Okay. Yeah, my question is regarding consumables business. So I just wanted to understand, what is the moat around this consumable business? Like, are we the lowest cost producers compared to our peers and even the unorganized end players? And I know we have some RFID solutions for our products. Does that give us a confirmed consumable business? Just wanted your views on that.
Yeah, Harsh, all our consumables are only for our printers, and all our printers are proprietary smart card or RFID, so they're locked into our consumables only. So our consumables that we manufacture and sell are exclusively for our printers only, and all our printers are locked, at least since 2016 end or 17 sometime, and they only run with our own consumables, and nobody else's consumables would work. So that's the situation. Yes. I will say that on a separate note, of course, the consumables are very complex to manufacture. They're very specific to the reliability and the compatibility of the printer. But, yeah, irrespective of that, it's not possible for anyone else to sell consumables on our printers because of the protection mechanism.
Makes sense. Okay. And also one more question around this. So does that even apply vice versa to our competitors? Do they also use the same policy for their printers, or we have the opportunity to share the do more business and consumables for their printer from their client?
So we don't sell consumables on our competitors, and neither do they. So it's an OEM business for all of us. That would get into some gray areas where, serious people want to start tracking other people's consumables protection. But yes, Domino and in March have also sold consumables sometime, I think since 2019, 2020. And Videojet did have a consumer protection system which was earlier than all of us, but I believe that's more of a mechanical type of protection with some basic electronic which was cracked, but then they come out with something new, I believe, in the last year or two. So as of the present moment, I think everyone is protected.
Yeah, okay. Thanks, Shiva. I just have one more question related to track and trace product which we are working on. So I wanted to know by when this product would be ready on a high level, like some time duration, and also wanted to know, are there any existing solutions for similar product which we are building on, and what is our right to win for the product we are working on? Thank you.
Yeah. Harsh, are these all questions only related to track and trace? Because
yeah, those are related to track and trace.
Yeah, so our solution is ready, and we are already deploying it in certain cases. But obviously, so technologically, on a second note, we think we're superior than some of the other solutions in the market, although they've been around longer, and therefore, because of the reference established part they have, obviously, the majority of sales, even with these 300 brands, the vast majority have gone to other competitors, and we've got a relatively less than control print share. And of course, these competitors are not Domino, Marge, or Videojet. They are other people who specialize more on the software side. So we believe that our software stack right now is better than what theirs is, even though they're more software-based companies. And the second part is that, we have an integration. The most difficult part of this whole business is setting up the printer. The printing part is the most difficult, and because we have that single point of contact for the customer, that it's our software, our printer, our mechanical arrangements around the conveyors and the interlocks with their line systems and the rejection parts and the vision systems. So the advantage for the customer is there's only one person. We can't go around saying that, oh, this didn't work, or I got from that company and that didn't work, which is a bit for the companies. But I think the most important thing is that for us, this is an entry point strategy into this segment. Our main focus is more to see how we can use the track and trace and the software to be connected much more to our printers so that we can give, right now what I say is the track and trace is basically being used for compliance reasons because the government has said so. Companies are not really getting a benefit from it. Our focus is at a different level because we focus more on the software part and how does the company get a benefit from implementing these solutions. So I think that's where the long-term differentiation will come in. And obviously we have to prove it in some of the companies where we're doing it.
Okay. So what I understand is maybe our top 3 peers which we have, they won't have such similar solution, and that would give an edge to Control Print, right?
Well, to be precise, all 4 of us were providing our printers to other software companies and the support to put our printer in someone else's. In the software person was proposing a full line. And he was already using our printers, or in some cases Videojet's printers, or in some cases Domino's printers, or some cases March's printers to integrate into the production line. So that's the thing that's there. So those 3 people are participating in this business, but indirectly the same way that we are over still through other software providers. Now we have taken a stand that we also want to give the entire stack to the customer because we believe that we can give a superior solution to the customer and, that can give the customer some longer term benefits. So it was already being done and we were participating in it indirectly, and now we are participating indirectly, also in a direct manner where the customer has the option of buying the entire thing from us rather than buying our printer indirectly through someone who purchases our printer and then gives the entire solution.
Understood. That clarifies. And if I can just slip in one more question, I was wondering, in the long-term perspective, as a market, and like only Indian market, if we think of, it's like of a bit small market. Don't we have a good plans to increase our export business because that could considerably increase our market opportunity, right?
Yeah, so I think that's what was asked earlier, and I think I said that it's a lot of effort because we have to make sure that we set up a full sales and service infrastructure. Then only will the top customers be interested and prove our reliability and productivity in those situations because that's what the A and A+ customers are looking for. But more than that, we don't have the bandwidth and resources right now to frankly target too many things. We're already hands full with our current amount of manpower or capability.
Okay, understood. Thanks for clarifying on all the questions and wish you good luck.
Thanks.
Thank you. Ladies and gentlemen, please limit your question to 1 per participant. The next question is from the line of Deepan Shankar from Trustline PMS. Please go ahead.
Good evening, everyone, and thanks a lot for the opportunity. So just wanted to understand now that the recent government announcement of this QR code implementation for top 300 molecules. So what is the kind of market opportunity size for the industry and what kind of market share we can gather on this pharma regulatory thing?
So Deepan, I think this question has been asked extensively earlier, and definitely the government has, there was some view that the government will give a deadline, but they've not extended the deadline, which means everyone is now rushing to implement this. We have got some small part of the business, like I said, not what a Control Print market share should look like, but we have got an inroad in this 300 top brands of India apart. And we're busy implementing that solution and in fact taking what a huge amount of resources of ours because in the beginning it's always much more difficult. And obviously the opportunity size is larger. In these 300, someone will implement something or the other, and we'll have to then look at how we can provide them a superior solution over the long term. So I think in a bare bones solution, which is what is required for compliance, that's the basic. And obviously that's interesting. It has a lot more revenue than just selling the printer and the consumables. But, in the long term, as a company, like we want to do is provide something that's technologically better for the customer, not just technologically, but for their business. And that's what we'll aspire to. So, these things can only be answered, years down, because in hindsight, we'll understand whether we were actually better than, or if we were able to provide a better solution or not.
Thank you. The next question is from the line of Alicia from Envision Capital. Please go ahead.
Hi, sir. Thank you for the opportunity again. Did we do any supplies for track and trace in the current quarter?
Fine. Could you repeat the question, Alicia?
Just wanted to know if we did any supplies for track and trace in the current quarter.
So, Alicia, we can't give you the exact breakup because, like I told you, of our revenue by product line, we still don't do that. What I can say is, like, if you mentioned before, that right now track and trace is a negligible part of our business. We have some stuff underway and maybe we supplied some stuff in the past, so I can't tell you exactly what we've done. But right now, it's not a significant contributor to our top line. Forget about our bottom line. It's probably negative right now.
Thank you. The next question is from the line of Ashok Shah from LFC Securities. Please go ahead.
Thanks for taking my questions and thanks for giving a buyback offer also to shareholders. Sir, does the promoter will be participating at full extent?
Yes, I believe it's declared. Jaideep?
Yeah, the promoters are participating to full extent, yeah.
And sir, second question is, does any development on the real estate side or the plot which we have?
Though the status quo remains the same. Yeah, Mr. Ashok.
Yes.
The status quo remains the same. And the matter is actually, sub judice also, so I would not be able to divulge any details.
Okay. Thank you. That's all from my side. Thank you.
Thank you. The next question is from the line of Karan from Asia Market Securities. Please go ahead.
Hi, Jaideep, if you can share the revenue breakup in terms of percentage.
Percentage of, in terms of the overall numbers, right?
Yes.
So, as you would be aware, Karan, we have printer business, the consumer business, the spare part, and the service income. So, for the Q1, the printers contributed about 17%, consumables about 63%, the spare parts were about 7%, and the service income was 13%.
Okay. And spares? Mass business?
No, it was very minimal.
Okay. Got it. That is from my end. Sir, any closing remarks you want to make?
Yeah, we are thankful to everybody who participated in the call and keep up the continued support for our company.
Absolutely. And thank you, everyone. I think special thanks to Mr. Saket Kapoor for participating in the AGM also. Mr. Kabra was very happy that, he was acknowledged. And so I think the board was very happy with all the people who attended the AGM also. Thanks for all the people for taking this time out. I hope we've answered, all the questions to the best of our ability. Again, I just want to point out that obviously, we give some feedback, it has to understand this to the best of their own extent. It's only to the best of our own idea of where the market is and where we feel things are. And like I said, a lot of new initiatives, but it's too early to really predict how those things will work out, I think. So, yes, that's the situation. And, quite happy to have done our first buyback to returns to all our shareholders. And, I also want to thank you, Karan and AMSEC, and for hosting this call, and, of course, to all the investors for taking part. Thank you.
Thank you.
On behalf of Asian Markets, that concludes the call. Thank you for that.
Thank you. On behalf of Asia Market Security Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.